Regardless of whether the current economic slowdown will persist or not, the global financial crisis gave us a lesson that no economy is shock-free. Amid this circumstance, portfolio diversification can considerably help an investor to manage risk and reduce the volatility of an asset's price movement. You're watching Economic Buzz Business to inspire and bring you a new perspective in seeing the philosophy of doing business. For you, international business people in Singapore and Indonesia, I'm Erwin Suryabrata. This is Economic Buzz for you. No matter how diversified our portfolio is, risk can never be eliminated completely. We can reduce risk associated with, let's say, individual stocks, but general market risk affect nearly every investment instruments. So it is important to diversify also among different asset classes. The key is to find a medium between risk and return. This ensures that we achieve our financial goals while still getting a good night's rest. Indonesia's economy is still expected to buck the global gloom, but the foreign investment climate has become more difficult in recent months. Indonesia has always been a mix of high risk and reward, and several multinational companies continue to do well. But the business environment may become more challenging, particularly in recent period. There are at least two main indicators of the current economic slowdown facing Indonesia. The losses in the stock market, accompanied by the depreciation of the rupiah. The Jakarta Composite Index or GCI fell in a significant level. And then there is also the widening of the current account deficit during the second quarter of 2013. This translates to a cut in the estimated economic growth for the year. The rupiah is yet expected to be more stable by the end of the year, as Bank Indonesia or BI should be able to manage the extension of maturity of foreign exchange term deposits, as well as relax its rule on foreign debt. The government also has launched monetary and fiscal policy packages that aim to address short-term issues in managing rushed foreign exchange denominated fund outflows, as well as circumventing employment cuts. Given that situation, it is considered to be relevant to start diversify our portfolio under the current markets. Diversification is a technique that reduces risk by allocating investments among various financial instruments, industries, and other categories. It aims to maximize return by investing in different areas that will each react differently to the same event. Most investment professionals agree that although it doesn't guarantee against loss, diversification is the most important component of reaching long-range financial goals while minimizing risk. MNC Business Report for Economic Buzz. And to have a deeper view and about securing portfolio investment under the current markets, we have Mr. Vicky Amarnani from Monex Investindo Futures. Sorry, slip on tongue several times. Mr. Vicky, anyway, thank you so much for your time, sir.
My pleasure, thank you.
Having you back here, people say that we are in a quite, quote-unquote, sluggish situation when we talk about investment in the capital market and stock market especially. Well, the current economic situation, as we know, have sent many share and currency investors exiting this country. Mr. Vicky, how will this actually impacting our long-term prospect when we talk about capital market in Indonesia?
Yes, I mean, in terms of capital market, all countries want good foreign direct investment, and Indonesia has been enjoying a few years of good foreign direct investment, but because of the recent panic, even in the stock market, we've seen from 5,200, the index has fallen down to 4,100. It's negative for the year because in Indonesia, even the stock market, more than 50% is invested by foreign investors.
Yeah.
So every time there is a panic or there is a rally to safe haven back to the US dollar, that affects our currency, stock market, and investments over here as well.
So that's showing how vulnerable this country, when we talk about the capital market. As you said, we've been enjoying the very quick and overflow of foreign direct investment. But look at us now. Has it made this country becoming so much vulnerable when we talk about depending too much on the FDI coming into this country?
Yes, I mean the foreign direct investment is very important for the supply of US dollars as well, and it needs that sentiment, because what happened 3 years ago when US was under crisis, all the money was coming down here to Indonesia. But now with the US recovery, Europe coming out of mild recession, money is getting devoted back over there, back into US stocks, and that is impacting upon Indonesia from the first aspect there. Second aspect, declining foreign reserves, declining commodity prices, lower exports, higher deficit. I mean, Indonesia, people were 1 year ago was under a surplus, now running under deficit, you know. Subsidy on fuel prices have been hiked now, high inflation forecast of 9 to 9.8% for the end of the year. All these concerns basically make people, you know, panic and move out of the rupiah into the US dollar. You know.
What's behind this kind of panic decision, if I may use that word, panicking? That's why people take very quick decision on this, leaving this country, exiting this nation.
Well, it's basically there's now the view for emerging markets have changed. I mean, if you look at all countries with deficit like Indonesia, Brazil, Turkey, India, it's the same situation. Stock markets, the currency has been weakening because people are worried about the balance of payment. More deficit, reserves declining, fear of downgrade. For example, India has a fear of getting downgraded junk status. So all these fears of high inflation, slower growth, declining reserves, no solution, no concrete solution at this point is causing big institutions to move out from there and move into other nations such as Europe, UK, which are now progressively improving. Yeah.
All right, we still have another segment to discuss about this, Mr. Vicky. And make sure you are still with us on Economic Buzz. We are discussing about securing portfolio investment under the current markets.